In this video, we're going to show a strategy for protecting trades using stop orders. In previous videos, we showed how to effectively use stop orders in general, but now we are going to explore more advanced options that are available to us. Let's begin. With our current setup, we are long 0.025 Bitcoin. We purchased this Bitcoin in a previous video. We had a stop order configured, but now what I want you to look at is in our open orders section, we have two stop orders now configured. We don't really know what the price is going to do. Now, instead of having a single price that determines the fate of our trade, it is in our interest to break this order up into multiple orders. That way we have a higher chance of staying in this trade, because ultimately we don't want to exit the trade. We want the trade to go in our favor. Now, if we put a stop order where the entire fate of our trade is determined by a single price, then we will be taking out of the trade all at once. What we want to do is break this trade up. That way we have larger chance of staying in the trade as long as possible. Now, that is what I have done with these two orders that you see here. Now, why do we have two orders? The reason we have two orders is because with GDAX, the lowest amount that we can actually place an order for is 0.01 Bitcoin. If we try to do less than 0.01 Bitcoin, they will give us an exception. They will throw an error to us and say, hey, this isn't allowed. So we need to be able to just place an order with a 0.01 Bitcoin. Since we have 0.02 Bitcoin, I was able to break this down into two pieces. We have the first piece that is 0.01 Bitcoin, the second piece that is 0.015 Bitcoin. I want you to look at the two prices. The first price that we have is 3,600. So if Bitcoin drops down to 3,600, this first order will execute. When the first order executes, our trade will be cut in half. It will be reduced. Our risk will be taken off the table, but we will still have 0.01 Bitcoin on the table, potentially giving us profits if Bitcoin rises. If Bitcoin falls further to 3,500, then our last piece will be taken off the table. Now, this gives our trade maximum flexibility. It allows us to stay in the trade as long as possible. As we are in the trade, we are exposed to potential upside, which is exactly what we want when we are trading. So we see here that Bitcoin was rising and then it turned, rising, and then we had a pivot point just here. We came down, 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 and we hit a pivot point just here. We purchased Bitcoin right around the it was about $3,800 level. Now Bitcoin has rose. We had a big green candle just on this highlighted day, and then we went sideways. Now it looks like Bitcoin is going to go higher. Right here, if you just see, if Bitcoin, this last pivot point is the point that we have chosen to put our stop orders. Now, if Bitcoin drops down to that level, it's possible if it breaks through that level, it could be going much lower. So we have two stop orders configured. Our first one at 3,600, our second one at 3,500. Now, having two orders instead of one gives us much more flexibility. Is you want to break your order down into as many small pieces as you can. On GDAX, those small pieces are 0.01 Bitcoin. I hope this video was helpful. Please like the video, subscribe, and support this DEEPLIZARD channel. Thank you.